Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr, Moonbeam's token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Also, I want to mention the two donation links down below in the description. Feel free to support Ukraine in its war against the Russian tyranny. You can donate to the Ukrainian refugees or to Ukraine's military. Any donations are very much appreciated. Even $5 is going to make a difference, guys. So thanks to everyone who has been donating. Now, jumping into the video. Now, the last update that we did on Moonbeam was back on May the 5th, right? And we were just sitting here above the 786 Fibonacci retracement. Now, for this video, I did write down some notes because I do tend to forget to mention some quite important stuff during the video, and I thought that, having notes on the chart would help me remember to mention everything that I need to mention. So we're gonna go over the notes one by one, and we have our Fibonacci retracement set up, obviously, with the swing low here in February, with the swing high in April, with the extension levels to the downside. So right now, I want you to pay attention to the 1.414 Fibonacci retracement sitting at $1.08. Now, when we were here sitting at the 786 Fibonacci retracement, okay, I did tell you that if you start losing the first fib level here at $1.80, your technical target will always be the 1.618, right? And you can even get as low as the second fib level. What we've done now is we've come all the way down to the 1.414 at $1.09. So we've lost the first fib level here, as you can see. This happened on May 10th, and May 11th was the strong drop to the downside, okay? Now, you can still target the 1.618. That is sitting at 85 cents, okay? So if you want to set up some buy limit orders, this would be a very smart thing to do because you can get these long wicks and quick recoveries back to the upside, and you can get filled during that period of time. So we dropped from the bottom of May 5th all the way down to the 1.414, which is a 55% pullback, and this was a great opportunity for you to wait just a little bit and enter the 1.414 or the 1.618. Obviously, I didn't know that the 786 wouldn't hold. I did expect it to come back down, but we had this potential bullish reversal pattern, which is the double bottom pattern. We're going to get into that a bit later. So what's happening right now is we're holding the 1.414. We have a little double bottom pattern right now. Actually, I don't think that's correct. Yes, the double bottom pattern here has been invalidated because the second low is a bit smaller than the first one. So right now, if you want to dollar cost average a bit more at the 1.414, that's a great thing to do. You can also look to set up some buy limit orders at the 1.618, as we've discussed earlier. And going down to the second fib level here at 54 cents, this is a great entry point as well. And to be honest with you, I do think we're going to wick down towards this area because the Bitcoin pullback is far from over, in my opinion. And we're going to lose the 1.618, have a potential long wick all the way down, and then a quick recovery. Okay, that's what I think can happen. So entering at these prices is a very smart decision, because if you have been buying at all-time high prices here above $2 to $3, then dollar cost averaging in at these cheaper prices is a very smart thing to do. Now, taking a look at the second part of the notes here, double bottom invalidated. So this is referencing to this large double bottom pattern that we had with a potential target at $9 if you would break the swing high or the neckline here. That ended up invalidated. Because we lost this low, right? Once you lose the first low, this was our first low here. Once this low gets lower than this one, right, you invalidate it, and you don't have the double bottom pattern at play. So you lost it and you're coming back down. We do have another bullish pattern potentially right now. Well, not bullish pattern, but we'll see what comes out of it. So yeah, that's regarding the second part of the notes. Also, I want to mention the moving averages. So we have the EMA, the 20 EMA and the 55 EMA, and I want you to pay attention to the gap in between the EMAs. It's pretty large, right? And we are very overextended from the 20 EMA, as you can see. We have had the last touch of the 20 EMA over here back in April, April 22nd to be exact. So potentially what you could look for is a back test of resistance of the 20 EMA. So from where we are right now, or let's say you entered at the 1.414 to the 20 EMA right now, that's a 55% trade. Now, obviously the EMA is coming down towards the price. So it is going to be moving and it is going to be lower and lower as long as the price stays down here below the EMA. And the percentages are going to get smaller, obviously, but still, I do expect a back test of resistance of the 20 EMA because in a downtrend, you usually see, back test of resistance. The EMAs keep pushing you down. And once you break them, back test them as support, that's when you see the bullish reversal. Okay, that's regarding the EMAs. Now, moving on to the third section of the notes, we have a bullish divergence on the daily chart here. So let's switch over. Actually, we are on the daily chart. Yes. So what I do want to do is bring out the RSI here. Okay. So we do have the RSI, and we're going to zoom in on the price action as well. So what the RSI is doing here is we're printing a higher low. As you can see, from this low to this one, you have an ascending trend line. Now, if we go over to this over here, if you look at the price action, you're not creating a lower low, you're not creating a higher low. You're literally on the same level. You could argue that you're creating a lower low because the candles closed below. So technically, this is a lower low. So you would call this a bullish divergence, but you could also go for an exaggerated divergence because you're actually, on the same level here. Technically, you're not, but, just a 0.5% difference isn't that much. So you have a lower low on the price action. You have a higher low on the RSI. This is called a bullish divergence, and this usually comes before a little pump. So potentially we could see a move to the upside from here. So what you could target is the 1.272 resistance here, which is the fib level. So from the 1.414 to the 1.272, that's an 18% trade, which is quite a nice trade. From where we are right now to the 1.272, that's almost a 9% trade. So I wouldn't necessarily put in all of my money right now. If I had, for example, $100, I would put in $20 right now. If we get the back test of resistance, I would take some profits. And then I would set up some buy limit orders here at the 1.618 and all the way down to the 2 Fibonacci level here at 54 cents. Okay, so that's regarding the breakout that we can potentially have right now. Now, next up we have a descending triangle on the 4-hourly chart. Okay, so switching over to the 4-hourly chart, a descending triangle is usually a bearish pattern where you see breakdowns to the downside or breakouts to the downside. So essentially, you're getting hit by one descending resistance trend line, but you're getting supported by this horizontal support, okay? And you keep bouncing from it. And as you know, you need at least 2 bounces to validate a level, and you have 1 bounce over here, you have 3 bounces over here, and almost a 4th one over here. So right now what is happening is you're tightening up in this range and it seems that you're breaking towards the upside. Now you're getting rejected from the 4-hourly 20 MA here, which is expected. But as always, when you start breaking these diagonal resistance trend lines, you typically do that with some authority. So potentially you could see a wick all the way to the 1.272 here at $1.30. That could be your nice take profit zone if you want to go for this potential swing trade. By that time, the 55 EMA could actually come back down as well, and you'd get rejected from that as well as the 1.272 fib level. So potentially, as you can see, we're actually opening a candle above the support, above the resistance, I should say. So this is a bullish indicator. But as always, you can potentially break out for just a while and then break down into the pattern and actually carry out the target to the upside. Now, if I take this trend line, which is the trend line taken from the top of where the wedge was created, or the triangle, all the way down to the support. And then at the point of breakout, that's where you place it, and you are looking at $1.50 as your target, which from where we are right now is a 27% increase. Potentially, we could see that happening. I don't think that's going to happen. We're going to get rejected probably from the 55 EMA. Now, if we come back into the pattern and see a move to the downside, you take the trend line, place it from a potential point of breakout here. It doesn't really matter where you place it because the support trend line is horizontal, and look where that takes you, straight to the 1.618 Fibonacci retracement. So you do have more confluence to the fact that you are potentially going to bounce off the 1.618 Fibonacci support level. Now the video is getting a bit longer. I'm going to switch over to the Binance chart because the last section of our notes here says that we have a potential Elliott wave structure. Okay, so moving over to the daily chart on the Binance website. So I'm going to go for the Elliott wave theory, and we're going to have the Elliott wave count to the downside. So we're going to start off here, wave 1, wave 2, and now we're having our strong wave 3, which is usually a monster wave. So potentially that's where we could see a move all the way down to 53 cents, where our 1.618 is. Then you can potentially see a little relief rally with wave 4, back testing this yellow resistance trend line. Okay, and then we have another leg down, potentially taking us all the way down to the second fib level here. That is something that I'm looking at. So this is potentially what you're looking at here. Okay, this is your Elliott wave theory count. Now, obviously, wave 4 cannot go higher than the wave 1 low here because that would invalidate the structure, but this is something that I'm looking at here. We'll see how it plays out, but I do expect a back test of resistance of this yellow trend line at $2.22 in the midterm, because we've lost this support here, but we haven't had the back test, right? You've lost it there, and you're looking for the back test of resistance. So let's see what happens. Thank you for watching. If I missed anything out on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. I do post TA and some updates in there as well. And I do have a Patreon, which is a great way to support me and a great way for you to get more exclusive content, requests, suggestions, TA requests, low cap gem calls, my trading alerts, all that type of stuff is going to be on Patreon. Or you can choose to become a member here on YouTube because you get the exact same benefits, but I just realized that not everyone is going to use Patreon. So thank you for watching. I'm going to catch you in the next one. Goodbye and good night.